This is a position in TJX. This is a call debit spread out in July with 81 days to go. We've been in this trade for 27 days. The underlying move about 0.7 standard deviations from where we initiated this trade. Implied volatility has decreased a little bit. I do see TJX running into a little bit of resistance somewhere around 71 and change. What I'd like to do is, right now, I would like to sell some either at the money or slightly in the money call vertical spreads to reduce my cost in this trade, also reduce my directional exposure. If we do get a healthy pullback, maybe I'll have a chance to add back to this position. So I looked at a couple of different scenarios here. I looked at selling at the money call spread. So selling 4 of the 70s and buying 4 of the 72 halves. This will make this a call condor, about 2.5 points wide, with just over $100 worth of risk on each side. This will also completely neutralize my position. It'll take my long delta to slightly short delta. It'll also take my theta from 0.8 to over 1. That's one scenario that I considered. I don't think I want to be completely neutral here, as I still do have a slightly bullish bias here. So I think what I'm going to do for now, I'm going to convert this call vertical spread into a unbalanced call butterfly. I'm going to sell 2 of the 67 halves. So selling 2 67 halves, buying 2 of the 70 calls. This will create a 4x2 call butterfly. I will try to collect about either $1.25 or $1.30 credit for this trade. This will take my net delta from plus 44 to about plus 20. So it will cut my delta in half. It'll reduce my positive theta just a little bit. But the goal here, since we still have 81 days to go, if we do have a pullback in the context of a ongoing uptrend, I may look to cover this short call spread and keep my long call spread open. If we do have a big pullback here, right, obviously I will lose less dollars for every 1 point move, since my delta goes from plus 43 to plus 19. So the trade here is I'm selling 2, assuming that the original trade was 4. So I'm selling half size of 67 half, 70 call vertical spread. It is currently showing a mid price of about $1.29 credit. My risk in this trade goes from $500 to $240. So I will essentially cut my risk in half. I will cut my directional exposure in half. I will look for a pullback to potentially either add to my long trade here, or I may just cover the short call spread, leaving my long vertical spread open.